it takes money to make money, right? You've got to budget for it. And the worst thing in the world is to waste 40 or 50 grand getting something done and not raise a dime. It'd be better to budget for 150 grand and make sure you can raise 3-4 million bucks and know where your break even is so you don't have to go back to that trough again.
Hello, everyone, and welcome to another episode of Test, Optimize, and Scale. It is a pleasure to have Peter Lusk on the podcast here with me today. Recently met Peter Lusk at the eToro Reggae Workshop in Houston and was fascinated by the type of organizations he works with, both on the investment banking side, registered investment advisory, and on the consulting. Pro Capital does consulting for groups that are preparing to go into investment banking and gets everything in order. Peter has a wealth of experience in the world of finance, and we're going to learn more about how he thinks today. Peter, thanks for taking the time to join.
Jason, it's a pleasure, and it was wonderful to meet you. I think we spoke for like an hour. I wish it were a 2-day conference, and you didn't have to split so quick. It was good.
And we had the same watch.
Oh, yes. My wife, when we first started dating, people would ask me, tell me on the train, nice Pepsi. And I'd say, what the hell are you talking about? Your watch. I said, oh, my wife bought it for me after 3 months of dating. And I know if it's ever off my wrist, she knows to call the divorce lawyer, she told me. So this one stays on. But it's great. It's the only watch I've never broken in 23 years. So, yeah.
You gave me some tips on what to do if that happens. But sitting next to you, noticed we had the same watch, and that stood out. But I've been waiting to learn more about where it all started for you. We've shared stories about Los Angeles. I know you're out in New York now. What is your background? What brought you into the finance industry and where you're positioned today?
Sure, and thanks. I mean, I should probably do some animations for my website of some vignettes of stories of how I got here. So I'll go back to my first undergraduate, which is actually a graduate degree, a master's in architecture from Tulane, 1988. It was 85 to 90. And I needed to focus on my thesis. I was a big lover of anything garbage, waste to energy. A friend of mine's dad was a teacher in LA, in Santa Monica, actually, on Georgina, and he had this library. Back in the day when you had magazines where you used to take out like the subscription card and then mail it in through your own, and he had Garbage Magazine. He used to give them to me. And I said in college at my fraternity, everyone had, Playboy. I had subscription to Garbage Magazine. So it was a 5-year architecture program. It was called a professional degree, which would allow you to get your license quicker than if you didn't, and later got upgraded to a master's. And my father had been a youngest partner at Lehman Brothers. I grew up in a hedge fund, institutional asset manager between New York and LA. When I'd visit my father in New York, they had been divorced when I was a kid. But and I saw a penny stock company called Orpha, and it was a recycling facility that would take municipal solid waste and chop it up into particle board and paper board and ferrous, meaning magnetic, non-ferrous metals like aluminum, copper, all that stuff, and try to recycle it, and you get a bunch of compost. So in architecture, to get your master's, you have to work 2 summers. And one summer I worked for Gwaltney Siegel, which is a very famous modern architect. I lived in a modern house, thought it was all that. But by the time, this is going somewhere, the story. But my second year, the guy who gave me those magazines in LA said, hey, your neighbor's the head of the biggest engineering firm in the world, and they're doing a waste to energy plant in Hyperion Beach, which is right down the street from you, or right down the beach from you, the Hyperion sewage treatment plant. So I applied for the job, and it was fascinating. I wore a suit. I ended up at a board meeting for my first day as my interview with Mr. Newman, who was just a rock star. And it was in Wilshire Boulevard, top floor. They had the whole building. I didn't know Daniel Mann Johnson and Mendenhall from a hole in the head. But I wanted to work on this project. It was really cool. What they were going to do was take municipal sewage waste, mix it with natural gas, and burn it for electricity. So I'm sitting there in this board of directors meeting. I didn't know that. I was 18 years old. What the hell did I know?
Quite an interview.
Yeah. And I'm in my suit, and I'm sitting next to Mr. Newman, and butler service, white glove, like a whole bunch of guys in suits, like 10,000 times older than me. And it's 1988, so it's post-crash, right? And it's getting kind of heated and this and that and the other. And Mr. Newman leans over and he goes, 5 years ago, they were telling me I had to buy all these companies. Now they're telling me I got to sell these companies. I don't think anyone knows a goddamn thing. And I just ate my food, and that was it. So I went down to the 7th floor with all the engineers and the architects, and we built this. We were building this giant poop burning machine. And one thing, you're optimize, test, optimize. Yeah, I was with the architects, but I was much more interested in the engineering part of it. And my whole thesis was, my whole architecture background was, my whole finance background is, and we had a problem. So when they moved the poop and they mixed it with the natural gas and it went through more than a 30-degree bend, it would go to what's called pyrolytic combustion, which means non-oxygen combustion, which is, if you've ever heard of gasification, things like that, which is a huge problem because it makes the pipes melt and the fire alarms go off, the fire suppression systems. And I remember saying, wow, that's kind of a big bug, and the engineers, oh, it's a bug, we'll fix it. I'm like, but yeah, but the only way I think is you have straight pipes, and that's important. So they moved to giant egg-shaped methane digesters, which I think weren't the original plan, but that was a pivot. And now when you go by there, they have like 24 of these giant egg-shaped digesters, which became my thesis. Okay. I found this Orpha plant, and one of the guys one of the engineers said, hey, man, if you got to Carbon County, Pennsylvania, it's all these strip coal mines. You go to Jim Thorpe, PA, there's river rafting, boats, mountain bike, all that stuff. But you go 5 miles over the mountains, and it looks like Mars. So my concept was, you've got a 5 square mile, 100-year-old tailings pit, which is the crushed rock from a mine. And the Canadians were remining that stuff, the waste streams, for tiny little pieces of low sulfur coal, because it's high quality coal, and they want it in Canada. So my thought was, you put in a cement kiln, it's on a railroad line, it's equally distanced from New York and Philly. You bring in garbage, you bring in a cement kiln. You use hazardous waste to make cement. That was the way in the 80s to get rid of hazardous waste. And you get a lower cost of cement. You build a giant concrete solar building, earth-burned building. And it was quite innovative with this active hot skylight where you could pull down heat or vent it out, solar building. And the whole process, it kind of builds itself, like you seed it, right, with the concrete manufacturer there, because you're going to use 1 billion tons of concrete. And you build this giant concrete living building as a roof garden. And take the compost is 30% of the output, particle board, paper board, all the other stuff I talked about. Yep. And you put it on the roof, and you put it on the surrounding grounds, and you let nature come back. And if you go to my website at Pro Capital LLC and you go to the resources page, if you scroll all the way down, I did put my thesis on there. It's from the 80s. It's student work, but it was kind of a seminal sustainability concept that the building sort of builds itself. And the thesis was, my tagline was, if a building by its programmatic nature helps society, then the construction and deconstruction of that building, or at least it's should help society too, right? So no one taught in architecture school, and I got published at the end in an article called "Ecology is the Common Denominator of Design." And my point was this: when I showed up in 1987, everything was postmodern, Miami Vice, pink and green, Robert Mondavi, the wine, Robert Mondavi with that. That was like some Paris cathedral in architecture school. That was the thing, And then by the time I finished, it was all Frank Gehry and deconstructivist, which is another funny story. I used to walk from 18th Street to school at Lincoln Junior High School when I was going to public school in Santa Monica. Yeah, and right here. You're Lincoln? Yeah. And I would pass this guy's house, and I asked my mom, hey, when is that guy going to finish that house? It was all chain link and exposed plywood and stuff. She goes, oh, that's Frank Gehry's house. That's completed. That's a masterpiece. I'm like,
big deal.
It looks like it's not finished yet, but you can only do that in LA where it's not like moldy or rainy or snowy or anything. So that was the concept. And then I was published, like I said, and I wasn't having the cover article. And then they called me and they said, Bill McDonough is also going to write an article, so you have to share the cover with him. And I said, this is the best day of my life. because Bill McDonough wrote Cradle to Cradle, really just a brilliant guy. And old friend, some classmates of mine went to work for him. I kind of wish I had. I went out to New Mexico. So I left college. I went to New Mexico. I built solar houses with Mike Reynolds. I was a really shitty artist, but I was good with computers. I got a Mac. I got some software, and I got a color printer. You got time for another hilarious story?
Let's do it. I'm enjoying these.
So I made a deal with my old man. Hey, I'll steal a copy of AutoCAD if you buy me a computer, a Mac. They're on sale, student stuff. And he says, yeah, sure, Junior, whatever. And so I got this computer, and that was back when I had 4 megabytes of RAM, and I needed 8, and I would film the building of this thing on my computer and then speed up. And this guy calls me. Computer salesmen back then were like drug dealers. They're like, hey, I got this, I got that. You negotiate price from there. He goes, hey, call your old man in New York. I got the coolest thing in the world. It's called an inkjet printer for sale, and I'll give it to you for half price. I said, what's that? I've seen a plotter, right? Those were pen plotters. They didn't have inkjet printers. You couldn't do color render. You couldn't do anything. And he goes, 180 dots per square inch, super high res. Hewlett Packard just came out with them. You heard of them? I'm like, yeah, they make those laser printer things. He's like, yeah. And he says, I have the 11 by 17 because some schmuck with a Learjet said he wanted one, and he bought the big one because he wanted to print color maps. I said, no refunds. And so I'll give this to you. And so we bought the letter version, which is much smaller. And the no refunds part is funny. And the reason why he called me was because when I bought the computer, the software, AutoCAD didn't work because I didn't have a licensed copy. So I brought it back the next day. I said, hey, man, I want to downgrade to the last year's model, which I originally wanted. You talked me into the CI, the one with the math copilot. I want the old one. He goes, I don't take refunds. I said, well, I canceled the check, so, whatever. I figured this would be part of the problem. So either you give me the old one, or I keep it, or I just bring it back, and you get no money. So he knew I was a little bit of a negotiator then. So that's when he called me up. I got so many jobs with that color printer for the next 5 years. I went to Europe. I did all the computer graphics for Mike Reynolds' books on how to build these Earthships. If you Google Earthships, it's fascinating. We built hundreds of them for actors, and they're completely self-sustained, earth-filled tires, cans. The first thing we do is put up some photovoltaic panels, bunch of Makita and an inverter, a bunch of Makita stuff, build these earth-burned houses, catch water, all this stuff. Then I went to Europe. I was chasing my first wife, who was Danish. At a conference, I saw some guys in Denmark doing some stuff. So I went to the Folke Center for Renewable Energy, which is a wind turbine research center, right when 1990, when the wall was falling. So there were 2 places. One, I'm sorry, should I just keep going?
No, this is great. I'm enjoying hearing about
a little too much
how
detail.
You're using your cutting edge technology of your color printer to get these jobs. And obviously the Los Angeles, Santa Monica pieces resonate with me. Felt like I was there with you in the board meeting at 18, day 1 of the role. And then how your focus around sewage to gas to energy, and then variations, how you got published from there, really kickstarted you down this path, which I'm excited to hear how it starts to intersect with fundraising and with capital. But I'm traveling with Europe. I'm in Europe with you right now. I have friends from Denmark, so great to hear you're chasing your Danish wife out there. Where do we go next?
Yeah, so I was there. So we were building in Denmark, it's very hard to do solar architecture. So and this is important. This is how I made the transition to finance. And I had color printer and this Mac, and we were doing earth-berm stuff. Now, the current state-of-the-art software could only handle 1 foot thick material in 24 hours at a time. But we were doing earth-berm stuff, and one of the architects, and we had a bunch of really smart engineers from Russia, because Russia was collapsing. We got all these guys, food, a little bit of money, and a place to live, and they were happy as campers. We went to the Black-Scholes model, which is options pricing, which I later worked for my dad in Chicago for an option seller, which is a horrific way to try to squeak out a buck. So we used Black-Scholes, which is heat transfer through metal is the time decay math. Okay. That's where it all comes from. And Myron Scholes got the Nobel Prize. He ripped it off from some poor engineer who had to calculate heat transfers through metal. So we did that, and I built these beautiful renderings of really cool active solar buildings. You had to do 2 layers of glass and styrofoam beads when the sun would come out, and it would suck it up and put it back in. Anyway, came back to America, went back to New Mexico, was doing just moving cement. I wasn't doing much computer work. I was building houses. I was, $250,000 architecture degree, and I'm making probably $10 an hour building these houses, which is very heavy labor. My friends are studying for their architect's degree, and I went down to I went to Aspen for a year, worked for a great architect there, but really missed clean tech stuff. We were building, Tom Cruise's house in Princess Saudi Arabia. It was all, I called it set designs for oil barons and actors.
Good way to describe construction right there.
Yeah, and they were beautiful. I mean, it was high end. It was Aspen's best architect and stuff. So I went down to Mexico and worked on a project called I called Eco Flaco a little bit. We were supposed to take all the gray water and recycle it through these wetland sewage treatment ponds, which I had been doing in Europe.
Right.
And we had about 6 months to wait for the drawings to get approved. The guy lined up all these pieces of property 1 mile from downtown Santa Fe. I had an option to borrow $15,000 from my dad, but I was too scared because the title had names scratched out from Rodriguez to Hernandez, but it's all handed down over deeds. And I didn't move on it. I should have. Money loves speed. Don't be afraid, especially if it's someone else's nickel, to take a risk, especially if they got a lot more nickels left. So my dad asked me if I knew what Novell was, and his office manager Dominic had quit in New York. I said, yeah, it's like DOS. And he said, what's that? I said, NDIR instead of DIR. He says, I still don't understand what you mean. Do you know Novell? I said, yes, networking software. Because I was a computer guy, right, at architects firms and stuff. So I kind of knew how to run a network and all this stuff. So, and I told him, I said, oh, Dominic quit, you're screwed. I grew up with that guy. So I went to New York and started dealing with portfolio accounting systems on a big hedge fund, institutional money manager, portfolio accounting systems, trading systems, all this stuff. His crazy ass partner wanted to remodel the whole place. So I spent the whole summer, every weekend, floor tile, carpet tiles, ceiling tiles, wall pit, everything. We had to get everything out and everything in, which is tough in New York. And
and while working on the portfolio accounting system. So you're actually wearing both hats at that time. Absolutely.
And, some of these guys, a lot of people in business are just so arrogant. What's the big deal with these systems? You just put in a couple of floppy disks and the software works, right? And things are like, what's the big deal? It's just the carpet and the wallpaper and the ceiling. Yeah, but I got to unplug everything. It's a lot of work, and whether intellectually or physically. And a lot of people just don't. At some level, they lose sight, or they never did that kind of work. They never started there, whatever. So, so did that for a number of years. It was very successful. Funny. Brad Meltzer was on the drawings when I was really scared. I'd never done a building in New York. It's heavy lifting. You got bay doors and stuff and tons of material coming out. And so Brad was like, I went to school with Brad Meltzer. I hope it was the same guy. And his dad owned some huge contracting firm in New York. So I was lucky. I got a case of vodka and a roll of $100 bills after this third week, because I learned that the cleaning crew was Latvian and they liked absolute and cash. And the bay doors for the guys, the loading bay door guys, they just wanted cash, because it was like, 2 weeks. And I'm like, C note. And they said, when do you want it? So, you learn like that going up. And then, my father backed a guy in Chicago trading options, strangles, and I knew Black-Scholes model and was pretty good with Excel at the time. So I went out there for 2 years while we traded selling options and hedging them with the futures, which is just insane way to go. And I actually quit. I told my dad to shelve it about a year into it, because the guy was just losing. Markets got really volatile. And it was funny, my friends at Tiger and stuff, like you got to remember, I'm an architect, right? And I took some CFA classes just to get up to speed in New York. But I got friends at Tiger and hedge funds going, dude, you can't just go to Chicago and sell options and ride off in the sunset. It's not like how that works. I was like, well, they're just making so much money. I figured I'd go out there. Like, yeah, you go. So anyway, I quit, which took kind of a lot of balls to quit, and I told my dad, you have no idea the kind of leverage you're taking. You're an equity hedge fund guy. You're not a commodity futures trading guy.
Right.
My 7, my 3 is a commodity license. So I quit and I worked a new software come out called TradeStation, which was, it's still very active and a lot of back testing. People trade through it. I went to work for the Breathitt brothers, whose father had a newsletter about stochastics, right? It was called High and Low. And they ported that math over to TradeStation. And I started basically all over again. I was yes, is your computer plugged in? Are you sure? Flip the switch in the back, put the floppy disks in, right? And we did some trading systems and stuff. I got into that. Came back to New York. Refco, which was a huge commodity trading firm in about 1999, was sniffing around buying Forsman Left. My father had sold his company, the finance firm Forsman Left, in 1987. The market crashed. He bought himself back at 10 cents on the dollar in 1988. 1999, I got called back in to upgrade all these systems that I had upgraded in the mid 90s. And this, I mean, this is a story about hubris that is amazing. I wish I had my little prop. So I come back and I'm a consultant, and he sold it to Refco, which at the time, Ray Friedman, was the biggest commodity clearing firm in the world. That's kind of what I was doing in Chicago, met a lot of those guys. And I just installed Barra's risk analysis system, which has a I'll use my phone, which has a bunch of bars. It's just a printed piece of paper and a bunch of bars. And this first bar goes to the top of the page.
Okay.
And that's specific risk. It went to 160%. The portfolio manager was 38% in one stock, Best Buy. Wow. He had been short 6 months before. And so I'm sitting in this room full of new buyers, masters new. Sam Zell, the biggest real estate owner in the world. Phil Bennett, who later did 10 years in the pokey, about a year after this conversation, for taking Refco public by moving money in and out of an offshore account, kind of like Enron had done. Why someone would repeat the crime of a decade before to go public, I have no idea. But so imagine this: I'm 29 years old. My dad's asked me to put in this risk analysis system, and I live in the computer room now because no one wants to talk to the guy whose hair is on fire because you've blown out the software. It can't even print. It only prints to 100, and which is what I said. So I'm sitting there, Sam Valley. I have this chart. I'm like, see this line? In the computer room where I live now, it goes to 160%, which is slightly more stupid. Or I think I used the retarded word. Slightly more retarded than 100%. And it doesn't even print to 100% because why would anyone do it? And I gave it to them. I said, this is the one chart. My old man thinks it's important. It's your firm now. This is what you bought. And they look at me and they harumph. They slide it back and they say, Junior, Harnish was up 40% in an up 12 market. Don't you think we ought to let the big boys run the money? I was like, okay. I held up this chart with this one bar and a bunch of tiny little bars. I say, wait a minute, guys. Well, first I said, he was short down to 12. By the time it hit 17, we hit a 13F filing, which is you own so much stock, you have to tell the world about it. Mm-hmm. Oh, and last week, Marito Bartiromo called it the stock of the fucking year because it hit 86, which is the kiss of death. And they look at me and I go like this. I go, this shit works upside down too, right? Or in reverse, I think. This stuff works in reverse too, right? They were down 75% in 2000. They got sued by everyone. I was no longer a consultant a month later. Reading reading reality to people can have devastating consequences for your train commute home. But anyway,
I bet, especially when they're stuck to outdated ideologies and letting the big boys run it when the numbers are saying otherwise.
Yeah, it just taught me how superficial so many major management and decision makers are. They don't really dig into the details. They don't. And looking back, the guy was moving $50 million off and on the books or something like that every month. Like, this was the least of his problems. This was one acquisition of many. It was a growth thing. Maybe he thought he was going to check out before the shit hit the fan. So I went to business school. I had a consulting firm, went to business school, met my second wife there. I'm still with. And I read a paper on ESG rankings. And I started an investment advisory firm called EcoVest. It was 2003. My father had sold the firm. He went to work. He actually, one of the only letters, it was quite personal. He asked me to read a letter, and he was going to raise all the money for Wilbur Ross, who is probably one of the most corrupt and evil people on the planet, in finance, certainly, who was the bankruptcy king for the Rothschilds. and he raised it. He said, "You're managing money at 1%
Wow.
for the Rothschilds. I'll turn you into a 2 and 20 fund. I just sold my hedge fund twice. Let's do it." He said, "Sure." Wilbur said, I'm not going to sign your 20-page employment contract. Just sign my 5-page. I want to start right away. And they were classmates at Yale, by the way. And then 3 years into it, when he raised, oversubscribed all the funds, they were buying out LTV Steel, which is in bankruptcy. They needed 300. My old man raised 400 million. He said, "You're fired." Dude, I just raised you like all the money in the world and we're killing it. He says, "He has to sue me." He says, "Come on, man. I'm co-chairman. I get 30%. What's the big? It's so sue me." Anyway, the amount of greed at the top the people I've dealt with and hubris and greed and is insane. So I started EcoVest, which looked at increasing rates of, first I would do a green screen. I got all the rankings for free because I had a couple of quant guys I worked with and some data, and they liked that I could back test a C versus a B versus an A in your peer group. ConocoPhillips versus ExxonMobil versus British Petroleum. BP was a C, and I could never buy it, and it drove me crazy. And these guys at the ranking company were like, they get sued all the time by OSHA. They're the worst record. I'm like, yeah, but their cash flow is insane. I ran that for about 2 or 3 years. I never got quite to a 3-year track record. Wilbur and my old man got in a fight. We couldn't afford to keep it going. There's a deposition. I was dragged into that lawsuit, whatever. I can expand on it later. But so it did EcoVest and it had great performance. It was very sophisticated. No one knew what long short was. I didn't have a 3-year track record. I'm the son of a hedge fund guy, so no one. I learned unless you were like Jamie Dimon or someone really big, it would have been better to have Sung Joong Lee, my head quant guy, who's brilliant and whose father was the head of Starter Clothing in Korea. It would be better to have him on the cover and my father raising money for him than working with the same name and stuff. It was just too nepotistic. Anyway.
Random some issues there.
Yeah.
So
it was really early on in ESG. No one knew what ESG was. No one knew anything about it. Now it's the hottest thing.
I still explain it to people today. Environmental, social governance. I'm just going to make a point to familiarize audiences in case they didn't know the acronym right out of the gate. So I imagine it was a constant education process.
People would say, I don't want those guys. They're too good. I want the bad guys. I'm like, no, actually you don't. Quantitative, because I'm always a quant guy, right? I'm a computer guy. And I'm into clean tech. I'm into sustainability, but in a real quantitative kind of way. So it would still work. I just got picked up to run a fund. It's small, knock on wood, it all goes through. But I have back tested a lot of that data with some of my partners over the years. Certainly the increasing rates of free cash flow. It's called quantamental. It's kind of a division of not quite technical, not quite fundamental, which I love because I think stocks are driven by cash flow. Not like, oh, I think they're going to come out with a great product, or I hate to predict. You're just going to be wrong twice. It's never going to be what you predict, and it could be the opposite. So your bet goes both ways. I like to follow. It's kind of what I do now with Akanto, trend and momentum and prosperity.
We certainly see it on the private side too, working on these deals.
Right? Yeah. I mean, yes, you have to have great management and a great vision and stuff, but it becomes really difficult on the private side to quantify some of this stuff. And that's what I try to do with Pro Capital and capital raising. So I'll let you. So anyway, that's kind of how I ended up today. Sorry for taking like 20 minutes to get there, but I'm kind of old. I got a lot of gray hair. So
Peter, you have a fascinating story. I didn't want to interrupt. I guess on where it's a 30-second overview and they just stop. But I feel like I know you just by going through every detail there. Imagine viewers, listeners, the same. I didn't even have to illustrate what you were talking about for the graphs or any of the visual elements. You explained it perfectly, and quite a story. I mean, you've almost like a Forrest Gump type story where you're in a different life, different chapter. Here I'm in eco, here I'm in architecture. Now I'm, quantamental. I'm showing these new models and numbers and how it's working out for me directly. How do you take that into Pro Capital today? How has it shaped your perspectives on what a business needs, what they need to prep, the type of cash flow, perhaps, the type of team, elements of their product, of their projections, of their forecast as a whole?
It's exactly what you described. It's all of it. Now, you got to remember, I'm growing up the son of he was a marketing guy. My dad was smart, but he was a marketing guy. But I grew up in the
You're saying
environment.
marketing guys aren't smart. I get it.
He's
So it's
a brilliant guy.
talents.
He raised a lot of money. But he wouldn't get into like the fundamentals, or he wouldn't read the annual reports of these companies, but they were all around, right? The office. So when I go, so I kind of grew up in the world of reading material, succinct, what's the story, get to the point, why should I buy this thing? And I grew up watching all these bets pay off and not. So in college, actually, my father asked me to do some due diligence on the Joseph Papp thermonuclear engine, which is a amazing story. Feynman, the physicist, who's in Oppenheimer as the arrogant guy, the young, actually unplugged it and it blew up, and he was prosecuted for manslaughter but got off. So I went out. I started the Tulane Green Club, and I went out west with this brilliant guy, Myron Katz, invented MRI but didn't get the patent on, and we started doing due diligence on this stuff. I was still in college, right? And so fast forward, I worked for I have 3 licenses: the 65, which lets me run portfolios of public stocks, be an investment advisor, charge a fee, 1% of assets or management or whatever. I have a Series 7, which is an investment banking and I can't call myself an investment banker. I'm not a 79, but it's a broker dealer rep, which allows me to public stock or private stock. I can take a commission based on a transaction, a percentage of money raised. And then I have a Series 3 for commodities, which I don't even want to get into unless you want to lose all your money or you work with oil tankers. You don't really need one. So I set up Pro Capital right when crowdfunding was about to be a thing. It was actually, it's called Pro Capital Exchange, doing DBA. And I set it up for crowdfunding with an investment bank that wanted, they were a broker dealer that wanted to come down and be a broker dealer for multiple crowdfunding sites. Didn't have the network to do the crowdfunding, but I changed it for capital, and it's my tagline: succeed in raising capital. And I work for investment banks on the broker side, not like Goldman Sachs or anything like that. You know, I was never there 24/7 doing the grind. But I focused on clean tech. I would bring in deals or, battery technology, gasification. I was on the board of directors of some companies that went public in food waste to ethanol, all that kind of garbage stuff I love, and alternative energy stuff that's been my passion, which is the common thread of everything, right? Quant data and clean tech shit and trying to make a living. So I set up Pro Capital to sort of, I call it pre-capital consulting. Before you go show this to your rich Uncle Henry, or you want to go knock on the door of Goldman Sachs, the VC department, you better have the same set of materials for yourself and for anyone you're asking for anything over $100 for. You deserve it, and they certainly deserve it. And that's a business plan, the document everyone needs but nobody reads, but the founder should keep it like a diary. Financial projections, pro forma projections, which is usually where I start, because I can't make it work on paper like you're ever going to make a profit or break even. Why spend the 20 hours on live plan to put together a plan or a business plan? And then once you have those 2 documents, then you put together the investor pitch deck, right? What's in there for the investor? I always see it backwards. I always get this pitch deck. I always get the lipstick on the pig before I can see if the pig's ready to eat or not, and my vegetarian wife notwithstanding. So
it's missing the meat. You're asking questions that they haven't asked themselves.
I've seen it so many times. And I've seen decks that have real estate guys I worked with, they had 3 boxes and the text ran out of the box, right? And I said, okay, let's say I like really crappy decks that have big mistakes and typos in them, and I got $100,000. I want to buy in. Where's your offering documents? Do you have a subscription agreement? Do you have risk disclosure? No, we don't have it. Then why the hell are you showing me this? Don't show this to anyone. Certainly not without the typos and shit, right? So
can't invest into an idea, especially one that's not polished.
Or that you just physically can't take investors. You don't have the materials. So I see it all the time. I work a lot with the Clean Tech Open for the last few years. If you go to my website, and I just moved how to attract investors to raise capital to the first page, little PowerPoint presentation. I've been giving that to the Clean Tech Open, which is 50 startups that are accepted. Many more apply. Columbia University, NYSERDA. It's a national program, Clean Tech Open. It's all clean tech companies going for grants. And what we do is we mentor them. They come in, we do a spreadsheet, we do a little business plan, we do the investor deck, we get their 1-minute pitch, their 3-minute pitch, and they go through a series of competitive speed dating with us. And usually I say, shut the hell up. I have 3 minutes, write everything I say down and don't interrupt me. and I have had guys come to me at the semifinals in Boston and say, remember us? I was like, I'm not sure. You said, shut the up and just listen to what I'm saying. Don't talk back. This image doesn't make sense. This image is too pretty. These words don't make sense. I don't know what that is. Change this, do that, do that. And they came up, 2 companies said they went right to finals. They didn't even have to go to the semifinals because they made those changes. So when you see 1,000 decks and you've seen deals and you've seen check writers say no and why, I kind of put that in that 15-page doc about what you need. And so once you get the pitch deck, then you go to the lawyers. You know, the guys like we met at Jim Rao. I like Eric Weingold, the ppmlawyers.com. He's great. Do the offering correctly. Yes. Otherwise, you can end up in jail. And don't pay a finder if they're not registered. Everyone promises you stuff. So, but you don't know what you don't know. And then you burn all your leads by going and learning it on your own. So just spend 2 to 3 months with me, pay a couple of grand. I'll knock it down. If you want to give me some equity on success or whatever, we'll defer payment to you get cash partly. However you want to work, if I like it, if I can add value, please, if not me, find someone else to help you like that. And don't blow it in front of people who can actually cut you a check because they'll never let you back in the door.
You get that one shot. And I emphasize engage experts constantly. We just heard about your whole background, your whole life track, and you're able to bring all of that experience, all of those findings to the table. It's like you're telling them, hey, don't interrupt me. Let me tell you what's going on here. You're not paying me to hear your story, your version of why you put there, your excuses, your rebuttals. I'm letting you know the exact things that the people on the other side of the table are going to be looking for. And if you implement in this fashion, you're going to get a much better response. Here's my track record. Here's what's going on. It's actually where we overlap. That's how I got brought in as a marketer into the world of investor acquisition, investor marketing, capital raising, where fundraising was a constant theme among our clientele. I started my agency as a growth marketing firm. Everyone was bringing up fundraising, whether it was working on the marketing section of that business plan, which was usually non-existent, and sometimes in live plan, like you were mentioning, whether it was putting together the pitch deck, running a first marketing campaign to be scaled with capital. So they had some numbers. They were actually able to prove what they were saying, or even participating in that investor meeting itself. You know, they'd tell me, hey, we like the way you talk about our growth. Well, can you come? You'll probably be able to help us secure this round. And then I was introduced to 506C, learning I could solicit accredited investors. The light bulb went off because now I was able to use advertising, outreach, content marketing, all the things that I've been doing and in the past for Fortune 500 companies. Now I was focusing on startup to mid-market on the private side. I was able to integrate those tactics that really make the world of digital work. And we're living more and more on these devices. I mean, each year, I mean, it's astounding how much time we spend. So why wouldn't capital raising? Why wouldn't those investor discussions, investor outreach, lead generation, nurturing occur on those devices that the investors are on? I was told about Reg CF, told about Reg A+, was brought to the table to run advertising for Reg CF day one back in May 2016, started working Regulation A+ campaigns later that year. To date, I've worked on over 400 of these that have collectively produced 9 figures of capital. And I showcase a lot of the findings here and on our webinars and Crowdfund Professional Association board, Forbes Angels Council, all these different places, because it's an unknown world. And then I'll see different schools of thought, digital marketers that just want to pull from what they've been doing on TikTok or blogging or with influencers or perhaps some financial email newsletters.
It is a brave new world. It is insane. And you say that, and I'm an old gray hair guy. I mean, not to diss my current firm, but, you know, I said, where's the data room? What's the outreach? I looked at, there was a American Equity, AEI or something back in 2007, and it looked like a cover flow from an iPod. And you could see deals and you could do it all in there. I was like, oh my God, this is so cool. So many investment banks still don't have that. They're like, oh, we send out by email and stuff. when I met
And they lose
you
their
at
chance.
that conference, I learned so much from you, Jason. I was so impressed. You must use Just for Men because I'm sure you would have just as much gray hair doing all that stuff. And you've probably
Not
raised a
yet.
hell of a more capital or been involved in it than I have, or maybe ever will. But, it is and it's moving at such a fast pace. I feel like it's so hard to keep up, which is, I'm really excited to meet you and refer you. I mean, I think I have to have a whole new section or a whole new page in my how to raise capital on modern, and because the rules have changed. So I wrote that thing like 5-7 years ago. The rules have changed on what you
Yep.
can solicit, who you can solicit, how you can solicit. Smartphones weren't a thing. DocuSign was just between the most advanced lawyers 5-7 years ago. Now you have to use it. So
Absolutely. And
I'm
bringing
really
your
impressed with what
perspectives.
you're doing. And
Thank you. And I was gonna, bring it all together. It's the confluence, bringing your perspectives and using what works offline, online, because digital allows for scale. So instead of, the amount of phone calls each individual can make a day, we could drive thousands of people more to an offering page each day. These Reg CF campaigns, Regulation A Plus campaigns, which allow for both retail and accredited investors, the average investment's low. We need thousands of investors to
yeah,
participate to actually close the rounds. And we do that effectively because we're able to use this tool set of digital marketing to have that amount of traffic come through. Some of the campaigns have millions of prospective investors come through. But I do believe it's that collective of, hey, here's what works offline. Here's exactly what the investors are looking to see. Been doing this at Pro Capital for years, and that's built on decades of experience. I mean, we're talking 1987 crash. We're talking about all of these different events that have shaped your model. It's building what works offline, but for online in as few words as possible, with advertising, with outreach, with content that's pulling people in, and then a lot of follow-ups that are showcasing momentum, showcasing traction, creating those social dynamics. We call it the crowd effect. I know the word crowd isn't always welcomed in the investment banking, venture capital community. It's becoming warmer and warmer, but at the same time, it's that psychology of, hey, look at what's happening over here. The cash flow, the amount of investors, the social proof. I want to get involved over there. I see that line around the block. Maybe it's a small investment, but I want to get involved in this deal. I want to be part of this company.
Yeah, and it's so much more advantageous if you there's a whole bunch of new highways that opened up. Before it was outreach from a banker to someone he knew, or cold calling and just endless. It was horrible. I never went anywhere. On the investment advisory firm side, last year, I recently started that a few years ago. I'm sort of institutional accounts. I know with I wanted to test the waters with some inbound leads. And I like these services because there are people who went to like Wiser Advisor or Smart Asset and were looking for an advisor like me. So the inbound lead, they wanted to talk to a guy like me, right? When my phone rang, it's still awkward. It's still weird. What do you do? It's still, but at least I'm not outreaching to people who don't want anything to do with it. So now you can do that with private placements. You used to not be able to do that with private stuff as easily. At all. And you would have to go in and get a service like PitchBook Data and spend tens of thousands of dollars to find those institutions and call them and reach out to them. So, I mean, I'm glad you're a young guy because it's changing so fast, and you need to have like 4 pairs of sneakers on to keep up. I know we just met a couple of weeks ago, but like I said, there's a whole section or two. I really want to dive into the expertise that you have on what works and pull out a few nuggets, because there's costs. The costs you're talking about were, I wouldn't say sticker shock. They're not unreasonable, but they are significant. But so is anything. So is a PPM. So is hiring a guy like me to do it right. It takes money to make money, right? You've got a budget for it. And the worst thing in the world is to waste 40 or 50 grand getting something done and not raise a dime. It'd be better to budget for 150 grand and make sure you can raise $3-4 million and know where your break even is, so you don't have to go back to that trough again. Anyway, I'm rambling, but.
No, it's so true. And talking about these filings, issuers, founders of these companies raising shares, issuing stock, they hear how much the max is. Or Reg CF 5 million. I could do a side-by-side Reg D and raise even more. We're going to do 10 million. But they don't look at the success rates and how most deals don't hit the full goal and how their pitch needs to be as strong as possible. Otherwise, they'll lose their attention right out of the gate. And
you have that data, right? You were rattling off all these different deciles of who does what and the top 10 raise 90% of the money and all that stuff.
And it does change.
And you can have
constantly.
some really cool infographics with that kind of stuff.
Yeah. Thank you. I put a lot of work into it. That changing element that you were talking about. Every Monday morning, I do an analysis on the Reg CF and Regulation A+ space. Because I need to. Success leaves clues. I could just stick to what we're doing. You know, hey, we got 30 plus campaigns live. This is what's working on them. Let's just keep doing that, guys. But then I'm living in a silo. So I need to see what's moving across the board and how we could be influenced, inspired to put similar types of content into our campaigns. Speaking of which, you were talking about my perspectives and being able to give insights into deals. Would love to get the audience thinking more like you. What type of recommendations, what type of expertise can you share? What should founders listening in test towards their own growth? Whether it's towards the structuring of their capital raise or just towards their overall increase in valuation as a business, market cap perhaps. What should they be looking to test for their own business?
Yeah, I mean, on the Aconto side, I use wealth management software where I can and I backtest everything as a quant guy, right? I backtest everything and make changes and you can do that with data. It's much harder to do that with a living entity in an organization or something. But I'll focus on sort of the do's and the don'ts. Two active companies I'm working with. So I'm not going to name any names, but smart person to figure it out. I got a call the other day from a guy on Aconto. A friend of his is working with a beverage company. It's a healthy beverage company. It's non-alcoholic. I don't drink anymore, so it's great. I thought, wow, maybe that's right. And I go through my whole pitch. Bull case, bear case is bullshit. You need to break even. We do a spreadsheet. We start here. Right. How much does it cost? A couple grand a month. I can defer a little payment if I think there's going to be a success at the end. Blah blah blah. No, I don't work for free. No, I don't work for shares. I can't. And I can't raise you money because I'm with an investment bank that has a 10 million or higher threshold, right? But I can do everything and find you the right application. And are they revenue positive? Yeah, they're making 250,000. I said, that's great. Let's start. They obviously have something that's winning. Go on Live Plan, spend the $30. If a CEO or a person who's running a company can't spend a weekend or two or 30 hours or 10 hours or 5 hours going through their awesome templates and their questions and pick the different models up, I can't do that. Jason, you said, when investors are asking you to come to meetings with them and stuff, very smart guy who's worked with me at Goldman for like 5 minutes, left for one of our clients was a tech fund. They hired him out. I didn't care, let him go. And he said, Peter, everyone's looking for check writers. Bankers are check. I can't get a client to write a check. The CEO has to get the check writer to write a check to the CEO, right? Mm-hmm. So I become a coach, right? So I don't know if I'm answering your question well, but start with a plan. And everything should be in there. You should keep it like a diary. If it's really good, you have the appendix of all the people who said no, the pivots, everything you did, because you will find institutional money. You will find a gatekeeper. I call it the document everyone needs, but nobody reads, except the CEO who should have written it. Because I can't get that on paper. I don't have what's in your head. I don't have the experience. It's not my company. It's not my baby. But the gatekeepers are going to want to read that. And they're going to want to see that you've really thought it out. That you really have a plan, because it's their boss's money, and if you screw it up, they're going to lose their job. So that's the planning, and it's always the same kind of thing. Believable, bull case and bear case, they're going to beat you up. Know when your break even is, know what it is, because they can't argue with that. You know how much your bottle is. You know how much it is to make the juice to put it in the bottle. You know your marketing. Like, what's the VC going to say? Oh, no, bottles don't cost $2. They cost $1.50. Get out of here, right? But they are going to say there aren't 20 billion people on the planet yet to drink your drink, right? So Tam, Sam, they get all caught up in that. A lot of founders do. But also so, and be very careful with the pivot. Another company. So I'm really excited to work with this lady. It looks like she has the budget. She has the plan. We'll see if she does, if she gets me her business plan next week and wants to work with me, it would be awesome. And I love founders like that, and we can help them. Most of them are in the clean tech space, and I've gotten grants for people. Grants require the same thing. I've had it for a publicly traded company and private companies. They require a business plan, a thought out spreadsheet. And it's a little more hands off and institutional. You're not in a room pitching someone for a check, but at the end of the day, you're pitching Uncle Sam, and they got their rules and they got their regs, and they write more checks, honestly. And bigger checks, and they're non-dilutive, and they don't get you sued and all kinds of stuff. So they're great checks to do, and you can do them in tandem with other stuff. So does that answer your question at all? I'm sorry.
Absolutely. Like you said, CEOs want to talk to CEOs. You need to bring in the right people. You need to have the right information in there. You get one shot at this. Don't put fluff numbers in there, especially ones that are going to be able to be torn out later. Show actual use cases.
Also, don't get greedy. The other company I want to say is I invested 5 years ago. They convert ethanol to all kinds of propane, diesel, jet fuel, and they said we're a real estate group. It's actually a broker dealer, only does real estate. Very rich guy. It's nice to have a founder or a co-founder or a guy who's bought a technology and the scientists to go with it with deep pockets. But it also can be a nightmare for investors because those guys can screw around and change this. A guy lives in a $40 million house in Laguna Beach. He's a brilliant real estate investor. I invested in it. My investors invested in it because they said, we don't know the energy space. We don't want to compete there. We just want to license our technology, all these ethanol producers, and give cash flow like our real estate funds, keep it a pass through and keep going. And then I get this C round. They want to raise a ton of money. They want to buy a plant in Poland. They want to do a joint venture with a guy in Florida who I raised capital for, and who with these grants and stuff, who is not even close to being ready. And I am like, what the hell happened to keeping this a private company and a pass through? Because you guys don't know what the fuel space is. In fact, I was in LA on the call, and everyone's introducing themselves and big SDs and masters of the universe. I'm like, hey, can I just pipe up about who I am? And the first plant, I told you, the Hyperion sewage treatment plant, where you had like $1 billion problem. So I've joined this firm to do this deal. Now I have to go to Poland and check on another company that you have no right buying. You're a startup yourself. You haven't even sold a drop of fuel. And a joint venture that I know more about than even the CEO. I've known about that company before the CEO even stepped in. They took it out actually. So now I've joined this firm with a very serious dude, David Wheel, father of the Jobs Act. Now I have to do due diligence on 3 companies, and you've turned it to a 506C. You've poisoned it by making it retail. And I think even a retail investor is going to see that you can't pull this off, right? So I'm now currently needing to talk to these people about if you go back to your old model and finish that. I'm telling them basically close out this round and top off the instead of a $300 million, give them a $100 million valuation. They will freaking love you. They're going to get 3 times the amount of shares. Say we're going to go back to our original business model, which was license this thing out till we make so much money and all the investors have made their capital. Then we can go to boondoggles. But we'll go to boondoggles with what we know, that what we've learned, right? Yep. It's always learning and pivoting. Every company does. No one writes a business plan and 10 years executes it without a change. 100%.
Perfect example of optimization. And you go in thinking one thing, the data is showing you otherwise beyond what the original assumptions were. And by pivoting, by going more in that direction with efforts, with capital, able to see a completely different result.
Yeah, so if you tell investors you're going to do, there's a bunch of inside stuff I want to know, like how many B investors signed up for the new C round, how many old investors are investing in the new one. That's a huge tell on prior investors coming in on this round. If not, it's like it's the biggest red flag. That's ambulance sirens going off.
I see that happen on the Reg CF campaigns. I'll see groups that do multiple 7-figure raises, which is very strong, top 7% is $1 million more for Reg CF. And their next round, they're stuck at 190,000. And like you said, it says something and in a loud way.
Yeah.
But what about once you get it all right? You optimize, similar to the example you just provided. What have been the biggest success stories? And what tips, what examples can you provide around those for founders listening in who are ready to scale? They've tested it out. They've figured out the pitch that's working. They've optimized to make it even stronger. And now they're looking to take it to the big leagues. What recommendations would you have for them towards scaling?
Go back to your investors and ask for help. Ask for people. Most of the investors that you'll have so much more experience, time, and money than you hope to ever get, that I would go back to them and ask them. Usually they might come to you if they see the success, but oftentimes they'll be a funnel. They'll have so many irons in the fire. They're not going to think about coming to you. So you have to be proactive. Don't be nosy or rude or, an idiot. But once you get to a point, like, follow up with your investors and the advisors that have taken you there. The advisors that have taken you there might not know, but like, I would know a guy like you, right? And you might know a guy somewhere else, or a team or a service that I would. You're so plugged in, that and the landscape's changing all the time. So use the prior resources that you have benefited from and been lucky enough and blessed enough to have access to get you where you are. That would be my that's 90% of how things go, right?
It's an amazing recommendation, because it's a route that I see founders often, fearful of. The investors, we need to make sure that we look like we know what we're doing to them. I'm not going to go back and ask them. When I see an offering page not producing, I'll actually set up a test where there's a sample of 10, 20 investors who review the offering page on video, prospective investors.
Mm-hmm.
And it closes the loop. It's no longer a guess or my assumption of, I think this is what investors are going to respond to. It's their sheer, brutal at times feedback on everything that is listed in a presentation, from the pitch video to the headlines to the messaging around it. Yes, I do think it conveys the wrong thing if your investors aren't reinvesting in the next round. Maybe the valuation's off and it's just numbers. Maybe it's your traction, your growth. Maybe you're going back to the same folks for the same initiatives, same, more capital, same milestones.
That's why I say break even is so important, because investors know and they know they live and die at break even. If you don't hit your break even in 3 years and 3.5 years, you're coming back to them for another check and they're not going to be happy. So, do everything you can to get to break even. I mean, I think that the after 2008, just get me check writers. I still hear that. Just find me check writers. I'm like, dude, they don't exist, man. Every stupid investor lost his shirt and never came back in 2008. Anyone who didn't read the prospectus, anyone who got in markets, they didn't. Now it comes back, right? Crypto and all this stuff, But the CEO, really, they're buying the CEO. Management's everything. I mean, these guys with the fuel company, they could stumble around. It doesn't really matter. The guy's got so much money, he can pay his scientists and stuff. Unfortunately, I'm stuck in the B round, and the world's on fire. And it's and I really want to help this company get to where it wants to go. So many of them, but the CEO's getting their own way. Sometimes, and that's a famous cliche. Sometimes the management that got you to this round is not the management you're going to go, which is related to the question you just asked. So. But that's the hardest thing to do in the world. I mean, I got this other company publicly traded. I've got their original investors wanting to re-up, but management's like, no, you weren't there when we needed you. And one guy was dying. So, the last thing I'll say is everyone comes to me, and this is no slam on redheaded children with braces. But everyone comes to me and they think they have Heidi Klum and two things. Oh, I would never want to sell equity. This is going to be worth $1 billion. Why would I want to give any away? I'm like, oh, because $900 million isn't enough for you. And I'm like, lose my number usually. Right. And then having so much money in it that it becomes their plaything, and that they're not serious, they're not hungry. There has to be a fine line between being hungry and starving to death out there in the Sahara. It happens. Great ideas, good stuff, don't get traction, whatever. They don't come to you. They don't have enough money. They do stupid things, or Maybe it's if it's a good idea, and if you're really solving a problem, not trying to find a solution, creating a solution for not a problem. So yeah, go to your experts who've helped you in the past, and don't be afraid to step aside when you can't do what needs to be done.
Mm-hmm.
Yeah, that's the harder thing, because
Focus
then
on
they've
that
had some
larger
success, and
goal. Don't
right,
be afraid to step aside.
you need to be a little bit of a brave person, an egomaniac, to get to that point, and then you get to that point, and the ego swells. Yeah, but listen to the. My partners don't like me on the phone with clients and stuff like that, because I always talk about downside risk. That's the way my algos with capital markets work.
I'll
I
be
avoid, I use
transparent.
trend and stuff to avoid drawdowns and stuff. And a lot of people think that they want to sell the sizzle. So fine, partner with a sizzle seller, but I'm the due diligence guy. I'm the guy who's got to read you the riot act, who's got to be a little bit of an a-hole, and tell you the way the world is. And yeah, shut the hook up. I got 5 minutes on this call because we got 10 other guys coming through today. Write down what I'm saying. I hope it helps. If you want to, and you surround yourself with people like that, you'll be much better off than people who just say, "Yeah, sure, boss, you're brilliant. As long as you keep paying my salary, I'll tell you what you want to hear." That's the kiss of death.
You don't want the people who are just listening to the big boys. You want the people who are having conversations with you. You're able to make it an educational process and take it where it needs to go.
And you have so much feedback and data and access to that kind of information. When you were talking about that, I remember early on, like 10 years ago, maybe more, like AEI and stuff, they could see who logged in and who would go to page 25, who would actually read the risk disclosures, who would just go to the first 2 pages and quit. That was like magic and cheating back in the day. Now people are like, of course. That's not even square one. That happens before we get out of bed. So
it's true. And it's all about scalable traffic sources. It's great if I'm able to get a few individuals, but it's good if I'm able to get a few individuals. It's amazing if I'm able to get hundreds, thousands over the course of the next few months, next few weeks in some cases.
Then the data becomes fact, right? Yeah. Then you really get to the standard deviations of error become very, very, you can get a very high tolerance on the quality of your data when you have a lot more than just 5 people you talk to.
Far more
but even 5 people are pretty good. I mean, that's
5 people in a day.
Yeah, start with
one audience.
Yeah,
absolutely. Well, Peter, I want to thank you so much for coming in, and I want listeners, viewers to be able to connect with you further. Where's the best place for them to go to learn more information about yourself, about Pro Capital, about Conto?
Sure.
Where should we direct them online?
ProCapitalLLC.com. And I rejiggered the website. It's not the most beautiful website. It's not fancy, but like I said, there's a lot of meat in there, not a lot of lipstick. But I put up my 15-page due diligence right down. If you scroll down, you can flick through it. You don't even have to download it. If you go to the contacts page, I put in my Calendly link. You can email me there, or you can click the Calendly link and we'll book a call. My investment advisory firm, which I think we've got a great 3-year track record. One thing I would like to say, I don't just do proprietary strategies. There's a whole new world of these new ETFs. I come from a hedge fund world where individual strategies were 2 and 20 piecing together like a fund of funds. Now there's ETFs like SFALT. This is not investment advice. Don't go talk to a financial advisor. Maybe it can be me. SFAL, hedged equity, long short stuff. They're all wrapped up in ETFs now, which are super tax efficient and have for less than 100 basis points, right? I do similar active strategies, but depending on the account, that's a Conto LLC, ACANTO LLC, Aconto LLC.com. Again, there's a video in there. I need to re-upload it. I'm not as quick on the YouTube stuff as you are, although I am coming out with a video soon on politics. But yeah, those are 2 websites. Both of them you can book a call. When you do, it'll say Pro Capital and Aconto on my Calendly link, which has changed my life, by the way. Especially, hopefully, I'll get a lot more calls filling up the next couple of weeks, because whenever I push it out or do something, I notice I get a lot of calls all of a sudden, or do some marketing on LinkedIn or something with people I don't know, and I need to read about them. So it's great.
Streamlines the setup process, and highly recommend that all viewers, listeners do. Peter's a wealth of information, as I mentioned to begin, and I hope this discussion has just proven that further. Peter, thanks again for the time. Really enjoyed the conversation. Couldn't take enough notes, and really enjoyed the story. Thanks for going into depth with us.
Well, I'm glad you recorded it. Sorry, I got a lot of experience, a lot of gray hair, and it's hard to compress it into an hour. But thank you so much. I'm really glad I met you. I meet a lot of people. I don't get so excited to really want to do a lot of work with a lot of people and stuff, especially in the finance world. There's a lot of competitors and stuff, and guys who are better or worse. I really, really want to work with you and what you're doing and learn a lot more about it, because I think your information, you're on the cutting edge of this stuff. I've been on the cutting edge forever on stuff, as you can tell. And it's the kiss of death to be too early shouting into the void. But you are really right there helping people, doing the stuff that needs to get done to get shit done, which is what I'm about too. So you fill a huge portion of what I think is missing from deals, because I'm a little bit old school on that. And the new thing, you're right there, man. Congratulations. Even with the podcast, people are like, oh, you should do a podcast. I'm like, there's only one of me. I got two companies to run, but I'm glad I'm on yours. Thank you very much. It's the first one. Yeah. And put me on any lists or stuff. Tell me how to subscribe to yours. Put me on your list, whatever. One thing I'd say is like the ppmlawyers.com, Weingold. He's really done some really cool marketing stuff, and I've seen him expand on that, and his content's really good. So if you're gonna do good stuff, and people will ask you for it. And again, I'm asking you, Jason, to include me on your stuff, because I don't think you just send out garbage. You know the data; it's not worth it.
You know, I that really resonates with me, because I've worked on so many of these deals that I've got a better sense of what's going to work, what's not going to work. You learn more from the ones that don't perform. I mean, I've been a part of campaigns, a brief part in some cases, that have major celebrities, athletes, sharks attached that underperform. I've been a part of deals that was questionable about and put outstanding numbers on the table in comparison to industry averages. So I know what the conversation looks like too, a week, a month, a few months in when it's not working. We've really tried to go to great lengths to put this model together. But going to wrap this episode here. Peter, thanks again. Listeners, viewers, we love having you, and we'll look forward to seeing you next time. Take care.